I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Cyprus clinches a last-minute bailout deal. Markets around the world are rallying. Can the S&P 500 reach 2013 highs? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning after Cyprus secured that last-minute bailout deal. Now we're approaching 2013 highs. So how do you think the market will handle it, Scott?
Well, every time we get to these inflection points, the question is, how do you approach it? You know, we talked in the beginning of the year, how would we get through 1474, and we powered through it, closed above it, and then went to 1500 and change. Then we talked about 1530. Remember that one? How are we going to get through that? Were we going to push through it and fail? Were we going to push through it and have power? You know, we wound up pushing through it, had power, and we put in a high of 1563. So now the question, as we're going to be knocking on this door, do we, blast right through it, or do we, pull back a little bit, not have enough power? So that's a big level, 1557 to 1563.
Would you like to give us a visual so we can see which levels you're looking at?
I probably should have done that while I was talking about it, so I don't do it twice. I'll give you the quick visual, I promise. So if you look here, you'll see that this was that 1474. That was a September peak. And if you remember, to start the year, we powered up, went sideways and blasted through it, and had a nice trend all the way up to about 1530. Then this was the Italian election fiasco. You remember that? It was about 45 handles worth of volatility. Came in, broke below the 21-day, held above the 50-day, and then pretty much reset up again. And then I was like, what are we going to do? Are we going to power through 1530 and continue, or are we going to fail there? We powered through, went as high as 1563. And if you want to look at technically what's happened here with this whole Cyprus event, not much, right? You had like 3 down days here, then you had a little mishmash, but all in all, above the 21-day, above this macro trend line, above the 50-day. So here it is, 1561 to 1563. If we power through that and close above it, then you go, actually, let's go take a quickly look at the monthly chart. Then all of a sudden, we're gonna have to listen to, some of the media channels, unfortunately, start talking about the historic highs here and how close we are to 1576, which is about a pebble throw away, and that's right there.
Well, speaking of the media, Cyprus has just been dominating our headlines, and there is the concern now that we could see what happened in Cyprus happen in other countries. So how much of a reality or a concern is that to you?
Some of these headlines are there to sell advertising, or they're there because they attract attention. Everyone loves when there's fear in the mix. At this point, no one really knows what type of contagion it's going to cause, it's going to spread. So there's talk that, oh, why would you keep your money in an Italian bank or in an Irish bank or in a French, I wouldn't say French, but maybe Spain. So the market will tell us if there is true contagion. Okay, obviously Cyprus was out of nowhere, but then the markets handled it pretty well. You look in Europe across the board, it's up almost like 1%. So if Europe doesn't care, why should we? We've been one of the strongest markets out there as it is.
Now, amidst all the volatility that we've seen, you've been able to maintain as much as, I think, 9 longs and as few as 5 or 6. So how have you been maintaining your positioning throughout all of it?
Well, that's what's important. It's, we've been saying it's not an all-in or all-out market where, you have multiple positions as long as we're in a confirmed uptrend, and that never changed last week. You never saw IBD go to even, I think, uptrend under pressure. So with that said, you had to be in good positions, and I liked a lot of my positions. Some I've been holding for multi-months, some, within the last few days based on the pattern, and then you trade size around them. So this way, you could take cash flow when you go through levels and things trigger, and then you hold some for bigger moves, and then, depending on different ends of the range last week, you adjust your hedges. So I come in today, I think, with like 9 longs and 2 shorts, and I'll adjust. I'll maybe trim some into the opening gap, and then maybe add some hedges if we look like we're stalling, and continue to do so. And that's what I think traders who have been having success, have been doing. They've been managing their positions, managing their expectations as well, and just continuing to move forward and watch the price action of the market versus the headlines and the whatever there.
Well, let's check the temperature of the different sectors and see maybe what areas we can look at for clues for market direction. Let's start with the financials. The XLF underperformed the market on Friday, was weighed down by news of Cyprus. So now with news of the bailout, do you think that could be a catalyst for the XLF?
Could be, because if the banks were the problem, and I think there was some concern there. Money could be coming back here. I think people thought perhaps our banks were a safe haven versus those banks, but then everyone's like, oh, but we must have some exposure to those banks. So with it off the table, perhaps we get some energy there. And I think the market's going to need some power back in the banks, which we haven't seen last week, but we did see some healthy consolidation. All in all, this was the last time we broke, when we broke above 1530 the last time, the banks were there. So now we just pulled back to the 21-day, closed near the highs on Friday, opening up. I would say if we can stay above 1837-ish, that would be a spot for the banks to get in motion. We did see a bit of faulty action, just saying Goldman Sachs. Remember we were talking about first this accelerated uptrend that wound up getting broken to the downside, and then it did break below this support here. Remember that both supports, this one was intermediate, then this one was the 50. So I would say at this particular point, see how Goldman Sachs acts. Ever since their stress test had been a little weaker, it's got to get back above 150.70 and hold that in order to just continue to maybe build up here for higher prices. But so that's a key level there for Goldman.
All right, and home builders continue to act well and lead the market. How much will you be paying attention to the home builders for clues about which way we'll head?
Well, you want to see them continue to be strong. They tried to break out and they couldn't find their friend in any other sectors, or a lot of the sectors where they were the only group on Lennar's earnings to break out. And that's why I said, I'm like, if the market's that weak, it's going to get pulled down by the other sectors, not pull them up. So if you look here at the XHB, you will see that it did break out to 2013 highs. No one else really joined them, and then it held in there. So at this point, you could trade long versus this level here, and then this is the high which was put in on those Lennar earnings above 30.66. So this has been a leadership group. So you want to make sure it stays in that that category.
Right. And the industrials had a nice run earlier this year, but lately it's been having a little bit of trouble finding momentum. Above what level might we see them pick up?
Well, this is like trading someone in line with the spiders. They were leading the way a little bit, they were lagging a little bit, and now there's not many clues we can get from it. It's more like in line. And if you look here on the industrials, you will see, you go to this chart, and this is when it broke to start the year to the upside. And then again, just like everything else, here is where the Italian elections came in and hit it, held above the 50-day, broke again up to the upside, and kind of held that level right around here. It held the 21-day, but it's a little choppier. This 42 is big resistance. As these base on bases happen, they just get a little bit harder to trust. So that's why there is some skeptics out there. And right now, I would say it's got to get above 4163-ish in order to get back in this upper end of the range. And then the high here for 2013 to mark down is 4216. That'll be the pivot resistance it's got to get through.
All right, and checking in on tech, the NASDAQ saw decent gains on Friday as Apple continued its rally. The Cubes ended the session up almost 1%, so it's still lagging the market though a little bit, still a little bit of a mixed bag.
Yes, I would think if you want tech exposure, you don't want to be trading the Qs. Or maybe it plays a little catch up because Apple's been stronger and it's heavily weighted in there. If you want it to be long relative strength, you've had to actually play the stocks within tech for that. If you wanted to be short tech, there were some of those as well. So if you wanted tech exposure, if you look here, this hasn't been the right vehicle for you, because you see here, this is the highs back from last year. Okay, and all of a sudden, this is where we are here. So this did not take out last year's high where most other sectors did. So if you just had the Qs, you've been underperforming the S&P. Okay, so at this given point, if the Qs were to get above, just say this 69-ish, perhaps you get, a clean move for a trade back up to the highs. But overall, I think, with all the information you have out there, that you're better off just picking best in breed stocks within tech to get tech exposure.
Gotcha. All right, and gold did have a snapback, but wasn't too powerful. Where do you think it goes from here?
I think it's a testy spot, and it'll tell us right now. If you look at the chart, you will see it's the first bounce it's had since holding macro support. So if you look here at the GLD, this was that intermediate level. Remember when it broke to the downside, when it broke below the moving averages right around 161. What did it do? It came in and retested longer term macro support. So if you want to look at the chart more longer term, you will see that this is that macro support that held it the first time we got there going across. So the question was, can it continue to hold above it? And so far so good. But go back to more shorter term time frames, I would say for traders, you know, it has to hold above this 155. If it were to give away and close below 155, I would think guys that were trying to play this move to get back to the 50-day or fill this gap will be gone. Same thing for the GDX. I'm long some of that. I'd like to see, you know, this, which is trying to bounce, hold, just say 37.85. Otherwise, I would be out of the, you know, the minors, and that was it for the bounce.
Well, as we said, high beta tech is a mixed bag. We're going to go in the trenches with it. But first, a quick commercial break. Stay with us.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, starting with Apple, which was a highlight in the sector on Friday, gained almost 2%, took back its 50-day. What do you expect from Apple this week, and how much of the composure of the stock has changed?
So far, so good. You know, as we go higher, it'll be, you know, we'd have to continue to measure that. And so far, you've had two really nice trades here since that bottom. So if you look here at the chart, you know, we talked twice about this. And two different call spread strategies. First, this was like I think 2 weeks ago when it was going sideways and it was looking like it was going to take out that, you know, this descending channel that's been in control of the stock ever since 700. You know, we've caught a few bounces along the way. This was one of them way back when in November that could contained by it. This was another bounce that happened to start the year, was contained, and look at this failure here, showed no commitment. And then finally, we had this move above this recent pivot. This was like 439-ish, 440. And then as it broke it, something else changed. It held higher. It made a low the following day, right around, what was that, 448, 449, held in there. Took back the 50-day, okay, which was a start. So I do think that the path of least resistance could be to the upside, and then you have your next point of reference right around 484. So in order for this to continue to act well like it's been acting off the bottom, now it should hold the 50-day. 50 days, just say, or give it a little bit more room. I would say let it hold 459. Okay, and if it does that, I'm sure guys like me will stay involved. Right now I'm long the common. My call spread was taken away. Remember we talked about risk reward. The first one was, you know, bought the 435s, sold the 445s, risking 3.5 to make 6.5. That worked. And then last Wednesday we talked about, you know, buying, I think I bought the 460s, sold the 470s. This risk was only 2.5 to make 7.5. So I'm going to keep with the call spreads, but I will also be trading the common, which I do own now, and I'll be trading around it. So, you know, you could do it a lot of different ways here, but overall, composure seems like it's changed. It's trying to work its way higher, but you still have to be meticulous on your entries and exits.
Seems like only yesterday you were throwing your hands up in the air about Apple, so frustrated. How do you feel about it now?
It's better. Well, that's why, you know, traders like myself gravitate towards it, because there's opportunity. There's not that many opportunities out there where you could make 20 to 25 points in a stock and, you know, get a call spread that could be fulfilled, you know, and measure it. So it's nice when things work out, and so far it's worked out, you know. So at this point, I'll probably have less Apple than I have coming into the day, coming out of the day as it extends, because that's what I call trim and trail. But overall, you know, it's been a nice bounce off the bottom. It's been crushed, it's been battered, it's been bruised. A lot of investors are still, you know, trying to shake off some wounds. But, you know, if you tactically leave positions when it's in a downtrend, when it breaks every moving average like it did, you have the luxury of getting back into it. Or if you sold some, you have the luxury of buying back. So entries and exits matter at this point. You know, I'm not going to get, you know, overly, you know, excited about where it is now. And again, I'm just going to keep approaching it, and I'll stay with it if commitment stays.
Right. It seems as though Apple has pretty much switched places with Google, which has been pulling back and lost steam at the end of last week. Above what level do you think it could pick up some momentum and get back in motion? You
know, I tried this like 2 or 3 times last week and it didn't have much success. So then on Friday, I was like, you know what, let me try a little bit. The range is getting tight. So if you look here at Google, you will see that, you know, it's had an unbelievable move. Okay, to start the year, this was your gap up on earnings, and then during this entire trend, it never even tested the 21-day. So finally tested the 21-day, and just very, very quiet in here. So I would say if it could start getting above 819, 820, perhaps it'll open the door for more upside. There was a lot of talk in the actual hedge fund world, that I'm really not in that. I just have friends anyway. That during the way up on Google, it was long Google, short Apple, then that was unwound, and now it's long Apple, short Google. But again, you can't put too much emphasis on that. So for me, I'm going to be a little cautious. But if it were to break and close above 819, a lot of funds do own this, and we have the end of the quarter. So this might be one of those stocks they want to mark up into the end of the week. So watch that 819-ish. If it gets above that, I think we can go back to those highs.
All right, so keep that on our radar. Going from a have not, at least right now, to a have. LinkedIn was on your radar for a potential breakout above Wednesday's high of 175.40, and then went as high as 183 on Friday. It's getting close to that all-time high.
Once again, so it rested, let the 21-day catch up, and then on that upgrade, it acted really well. So if you look here at the overall stock, and a lot of traders were complaining that, here was your high, and perhaps it's a new high, and it's been lethargic. But overall, these stocks have to they have to rest. This was the gap up right here after earnings. This was your first consolidation that would wind up being buyable. Here was another shorter term, tighter consolidation, wound up leading to another big move. And then this kind of breakout failure that happened could have gotten you out of your stock. But again, you don't want to sell everything because it's not an all or nothing environment. Maybe you just trimmed it, and then when it broke above this, you could have got back in, and now all of a sudden, pow, right back to the old highs here. And this stock, in my opinion, is best in breed, and macro swing long should stay with it, and then traders could continue to look for opportunity.
Amazon also had a good day on Friday, saw nice gains of almost 2%. Do you think more upside continuation is in store today?
This one I think is rallying to be sold more than something to be held, and it has a lot to prove. This stock started to break down well before the market last week. It's still very random, so to speak, but Friday was an outside day, a small reversal. So let's take a look for the shorter term guys. I do think that here's, I guess, the support that it held. This was a mini red dog reversal where it tried to make a new low, reversed up, closed above the prior high. That's an outside day. But you can have a lot of resistance. So, at this point, perhaps you can get some kind of easy bounce into the 260 to 265 area, but this is going to be, the rubber match where the bears need to sell it here to contain control. This was the last time we had a nice clean breakout, and then it failed right there. So it did hold support, and it's well off those highs. So it's still a trade here, but this is going to be your resistance. So see how it gets there, so to speak.
All right, and finally, Netflix had some faulty action last week. Is this one likely to remain out of play for now?
This also has been a great performer. It's in the cards. If people want to mark something up to look good, this is that type of stock. So it's very tight right now. So it'll be on my radar this entire week. I don't have a position in Netflix now, but overall, nice pattern, nice consolidation. Here's your gap up after earnings. Here was when it flagged and wound up going again. And then the last time it tried to go, it fell, just like its brother-in-law LinkedIn, because they've been kind of moving together, but it hasn't gone again yet. So at this point, as long as it stays above this 175 to 177, I think traders are going to keep it on their radar as an A play, but it's going to have to really get above this 187 and have heavy volume and close above it for it to be in the cards to make new highs in the year, but it should be on your radar.
All right, great. And time for some quick hits here. MGM on the move, gained 2.2% on Friday. Where's next resistance?
MGM on long, above 1320. I would probably add to it above 1350. It'll be at highs of the year.
All right, Hewlett-Packard traded lower for a third day Friday morning, then reversed, closed pretty strong. What's next?
This is tricky, okay, because you had that topping tail on Wednesday, and that's when I got short. Covered some into the second down day on Thursday, and then it was even lower on Friday, covered a little bit, and then it rallied. And what did I do? I shorted that rally, thinking, okay, you know what? I covered well, because you always cover into the third down day. I have the luxury of shorting some. So if you look at the chart now, it's still fine, but here is your topping tail, okay? That is what gave me the clues to get in there and get short. Here's when it broke that low the next day to add to it, but it held the 8th day, and then it had some power. So overall, I'm going to use this as my stop. I'm probably short tier 2 for me here. What I'd like to do is I'd like to see it open up perhaps and then sell down. And if we were to sell through Friday's high of 23.14. I might add some, and then they've been making this a long hit because I think guys are involved in it with me. You go to the 8-day move. You go to your 8-day here, and I would say I would try and cover some into this. So I'd love to see it, open up positive, go negative, and then I would take some off into this 22.77, and then continue to see how the macro pattern puts itself in play. And if for some reason it just barrels through this high, I'm just gonna have to lick my wounds and leave it, because who knows how high it can go. But I think there was also like a negative, there was a negative story in Barron's, kind of like what I was thinking, like, it's had a huge move, but their business hasn't changed, and their recovery, probably can't be sustained. But if it's controlled by institutions, it's controlled by institutions. So overall, we'll see what happens.
All right. Yeah, one long hit. We'll go back to the quick ones here. Walmart's been acting well, had an ignited move on Friday, cleared recent resistance. So does it need some consolidation here before we can keep moving?
I'm long Walmart, and this was my retail stock of the year last year. Did well, and then it pulled back, and I was trying to give guys an entry when to get back involved. We had one tradable pattern right here when it cleared this 71.72-ish, and then I got back involved actually also on Friday as it cleared this area. So closed strong. It has a lot of room. Macro investors, I would stay with it, and I think that I still think that this is has higher prices in its cards. Look at its cousin Target, which is at historic highs, acting really well. If you're a stock picker and you're long Target, congratulations. It's been one heck of a move and one heck of a stock.
And 3D Systems had a good day on Friday, rose 3.2%, reclaimed its 8-day. What are the key levels we should watch?
This one I did like just a bottom feeder type trade. We talked about it clearing 30-30. That's when I got involved. I also bought a call spread, bought the 30s, sold the 33s. Decent follow through on Friday. I still think there's room here. I think there's no reason why it can't test this area here, which is probably about 33 to 35. If you sold it when it broke this upper area, which look at the potency to the downside, or you waited to sell this bounce when it didn't hold again, you have the luxury of trying it down here. So far it held a 200-day. A lot of guys are saying that's the bottom, it's going to make new highs. I don't know. I'm not in that camp. I'll stay with it as long as it shows some commitment. I probably will trim some into this up open if it's opening up.
So as we're heading into the first trading session of a holiday week, what's your focus?
Well, I'm going to trim some of my positions into the strength, into the open, and then I'm going to see if we could hold the gap. Is today a gap and go through that 1557 to 1563, or are they going to sell the gap up, which they might, and then need more time. So overall, I'll judge the positions, I'll judge the sectors, I'll look at what's going on in tech, and I'll continue to maneuver around my current positions. And who knows, maybe I'll have 13 longs after today, or I might be down back to 6 or 7. The market will tell me, and I'll just keep taking trades and managing, as the process shows its face.
All right, thanks so much, Scott. Happy trading, everyone. Have a great Monday.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.